Welcome back to the Eric Krown crypto channel. Wishing you a happy healthy start to this nice Wednesday morning over here. I could use a bit of a healthy start myself as my throat is on fucking fire. I'm definitely getting sick, but you know what? Nothing's stopping this damn show right now. Even if the motherfucker who keeps on drilling above me won't stop. It's not fucking stopping, baby. Anyways, plenty to discuss today. I wanted to follow up on yesterday's short-term time frame price action analysis as we were looking for a slight drive lower and then very likely a bounce after that. It's kind of where we're at right now. And then what essentially to expect in the next day, because tomorrow is CPI day. CPI literally right before the market open, I do believe. So likely going to be the catalyst that I think many people are looking for. Anyways, other than that, I should probably mention that Bybit's promotion, I believe, is still going on. There is a link in the description below. And then we can jump right into the analysis itself, which I'll actually start right over here on the Krown trade application. Again, you can find a link to this in the description below. And the leverage ratio is at all-time highs. It's literally never, ever, ever been higher for Bitcoin. Now, we do expect that on a maturing asset, that over time, this ratio will naturally glide up. But it is of note here that in the past year, all of the all-time highs on leverage ratio have actually been met with downside price action. Namely, this drop-off over here, right around 60,000 bucks. This drop-off here at about 47,000 bucks on the rejection. I believe that was in when was that again? Yeah, March of this year, and then again in June on the dump off from 30,000 bucks all the way to kind of where we're at right now. Anyways, I'm not sure if you can actually hear the drilling above, but it's like really, this is not the day for it, man. This is not the fucking day for it. Anyways, let's now recap the last few days of price action. We're having a downside bias based off of the hidden bearish divergence on both the 2-day time frame for CME and also the daily as well. That kind of gave us biases toward the bottom side of the range, somewhere around this blue box territory that we have outlined here. That was also based off of the range break that we did see at about 19,800 or so. And then, well, yesterday, close enough in this case. I'd say that that's basically the same sort of area that we're looking for. But ultimately, we were looking for a slight grind lower. That was this wick right here. Probably a bounce after that. Why a bounce? Because volatility on the BBWP indicator was going back into a contraction mode. So likely to, try for at least a short-term bounce, and momentum also just was turn up at the same time, I do believe, or at least they were in extremes. Anyways, that leads us to where we're at as of this exact moment, which, what do you know? The 4-hour BBWP is fully contracted here. Not only the 4-hour, but the 2-hour and the hourly are all on extreme lows. So we probably are looking at another short-term move today. But don't confuse short-term move with even like a medium-term or a higher-term time frame breakout or breakdown. I do think that that's more or less reserved, most likely for tomorrow if it's going to be happening. Now, with that in mind, let's go over the short-term time frame ranges here, and this is again only relevant to the short term, like only relevant to the short term. But yes, we do have a bit of range highs coming in right around just below 19,200 or so, and range lows, same shit as yesterday, basically. Even a short-term time frame closure above the 19,200-ish region, I would resolve this and likely look for $200 move to the upside, maybe somewhere around about 19,400, anywhere around there is fair game. Nothing really changes for me on a medium term or especially a higher term time frame, as long as Bitcoin is one below that prior breakdown region, about 19,750 or 19,800, depending upon your exchange, and then or two to the downside, same thing as before. Need to see a higher term time frame closure below no more than 18,100. Until we get one of those two things, I wouldn't really be calling any sort of like major massive price action here. Of course, trend is to the downside. We do have several other metrics that as of right now are a bit more biased to the downsides, but tomorrow's events greatly going to influence this. It's not wise in my experience to be front running these sorts of things, because weird things can and will happen, obviously. And if you've been around for even a short amount of time, I'm sure you've seen plenty of that. Anyways, let's now go reference short-term time frame stochastic momentum, see if there's anything of particular note here. And what do we have on the 6-hour time frame? 6-hour time frame is turning up, staying with upside momentum as long as Bitcoin's above the 18,870 pivot on CME. Full hour will also be up as long as Bitcoin's above 18,800. Similar number right there. 3-hour also going to be showing upside above 19,000, so a little bit closer to current price action. And then hourly is actually up as well, as long as Bitcoin's above 18,950. So keep those pivots in mind. As long as Bitcoin's above them, probably at least a test somewhere around these range highs. I mean, we're kind of already there, to be fair. But a closure above, and then yes, I would be looking for that next short-term move up. Again, short-term move, not the same thing as any sort of higher-term time frame move. Cool. So with all of that said, we're 5 minutes into this video. I want to now go over here and once again talk about the probabilistic setup that is probably going to be confirmed tomorrow. Tomorrow being Thursday, sometime around that CPI release, or a little bit after, most likely, But in this case, a few things of interest. So first and foremost, what is a signal? Well, it is a volatility versus stochastic momentum signature. Volatility represented by this indicator right here, the BBWP. And anytime that we have seen it get to extreme lows, which are defined as below 10 percentile or more, then the expansion phase from these extreme lows for the full history of CME, so going all the way back to the genesis at 2017, has led to an average move of about 24.25%, done over the course of just around about 2.5 weeks. Stochastic also has been correct in getting the direction of that volatility expansion 83.33% of the time. Why is that relevant right now? Well, we have a setup staring us right in front of the very face. So what would confirm this setup? Well, it is reliant first and foremost on BBWP, the volatility-based indicator of this. And what we need to see is we need to see the daily BBWP get above the moving average with a positive slope, and then also above the critical zone, which is the 10 percentile marker. Until those are confirmed, the signal itself is not confirmed, and the statistics do not apply. If and when that does happen, then we look at the stochastic oscillator's direction, and just about 83% of the time, it's been good in getting the overall volatility expansion direction, and we see, well, what's most likely, and in this case, well, it is still angled to the downside. It is not just angled to the downside, it's also rejection of the bullish control zone and a trendline regression rejection, actually even going all the way back here to March of this year. So getting the March highs, getting the July in August highs, and then potentially getting this high right here as well. And we'll be remaining with downside momentum as long as Bitcoin is closing on a daily basis below 20,250. That is to say that if Bitcoin were to close above it, we're probably going to see these sort of stats and numbers apply to the upside. But for right now, it is more statistically likely to play out to the downside. Personally speaking, I would actually really just like to see an actual break of the current lows. Again, that 18,100-ish number. But if and when that were to happen, then we can start to look at these numbers over here and come up with some areas of interest. The first deviation gives us an insight as to where we expect 68% of the results to fall between. So that'd be a range between 15% all the way to 33 and a third, and the average would be 24. So just taking those numbers and playing around with them, 15% puts you where? Puts you at like 17,000-ish. The average 24% puts Bitcoin around 15.5 to 16,000 bucks, and 33% puts Bitcoin significantly lower at about 13,500 bucks. So those would kind of be the areas of interest to the downside. Potential lows found around those, or at least bounces, I'd imagine too, if that were to happen to the downside. And of course, if it were to happen to the upside as well, probably looking at well, let's just see. The average puts Bitcoin back around about 22,000 bucks. 33% puts Bitcoin back at around 24,000 bucks. So with that in mind, obviously those can bleed into other higher term timeframes as well, but that would probably be the spark that ignites either the major dump bolo that I think most people are probably waiting for, or a nice little rally there. Probably another bear market rally to be fair, but a nice rally nonetheless. And so I wanted to take a second to talk about my sort of experience in 2018 and a major lesson that I learned in 2018. Let me actually just go back to the price action of 2018. Let's just try this over here. Here we go, put it on log, and here it is. So in 2018, dare I say this, I was notorious for being extremely bearish the whole way through when I started making YouTube videos, somewhere around here, I think it was, or no, it was March. So yeah, somewhere around here when Bitcoin was coming down from 10,000 bucks. You can go reference those videos in the past as well. I believe I still have them up if they haven't got copyrighted, because I used to play music that was not mine, and then they would like make me take down the videos. Anyways, in this case, the overall direction, as you can see, was down, and there was a 50% dump BOLA from the base of 6,000 all the way down to about 3,000 bucks. But there were so many bounces in between there, and it just wore down certainly my patience, and I'm sure many other people's as well. And one of the big mistakes that I made was that anytime that it would come down to the $6,000 level, I'd be like, this is it. This is the time it's going to fall on through, man. This is the time where it's going to go down to 3,000. And, again, eventually it did. But, there's a lot of just unnecessarily taken trades by myself, interpreting the direction before it was actually confirmed. So here's the trade-off. When you trade ahead of an event like that, where you have a strong conviction on the direction, but not a strong time conviction on it, well, you can kind of bleed yourself to death by a million cuts. With good risk management, it's not going to be too bad. And of course, like, I live to tell the day. It's not like I lost money at the end of the day, because eventually the trade did happen. But I did give up, or if I were to average out a lot of the trades that I took within this region, it would come down to the fact that I just gave up unnecessary potential profits, because eventually my trade did play out. But if I had just waited for an actual closure below the range lows, well, I probably would have saved myself a few bucks on those failed attempts, here, and here. And yes, would I have missed some of the move? Yeah, I would have missed some of the move. But we're talking about a humongous fucking move right here. You don't need to catch the whole damn thing in order to make a shit ton of money. So at the end of the day, that was a big mistake that I made in 2018, and something that I'm trying to rectify in this in this particular region right here. Because, well, do I think that things probably break down over time? Probably, yeah. At least that's kind of my general opinion right now. I mean, it is the trend, obviously. But I do think that Bitcoin could very easily, grind it out and bore the ever-living shit out of people, which is why you've probably picked up on me refraining from just calling like a major meltdown exactly from this particular point. Again, I just want to see closures below the range lows, essentially. But the setup is there, obviously. The question is, do we get another bear market rally in between there? Which I suspect that will probably get answered tomorrow. The first initial warning flag that we are going to get it would be with even a full hour closure back above the prior breakdown point at about 19,750 on CME. If you see something like that, probably good signal that we probably will see another what's called a bear market rally attempt. But until then, it's going to be a lot of waiting games and short-term timeframes. I mean, as you can see, we're talking about ranges of like $200 right now. It's not, in my opinion, this is not the time to be put on a significant amount of risk for the short term, because the higher term timeframes are the ones that are going to start to really run price action. Anyways, I'm just babbling on now. I apologize about that. My voice is absolutely on fire as well. So I think I'm going to go rest it, and maybe even rest myself as well. I want to take a second to wish you the best as always. Take care, much love, and see you hopefully soon.